could drop $1,000 an ounce, and it would still be at an absolutely fantastic level for the business of mining the stuff, or exploring for the stuff, or building. Like, we're down $1,000 an ounce now, from 5,600 to 4,600. Maybe it's come back up a little bit at this afternoon. But 4,600, are you kidding me? These mines were built considering prices under 2,000.
Welcome back to Metals and Miners. I'm its founder and its host, Gary Boehm. Today we have a very timely and an important discussion lined up on the metals and the miners market, and we're fortunate to have with us Lobo Tiggre, founder of the Independent Speculator. Lobo, it's a privilege to have you back on Metals and Miners. Welcome to the show.
Thank you, Gary. But you left out an important credential. I'm also Darth Silver, so I should be dancing on everybody's grave.
Well, that is true. Hey, you might as we go through this. Let's find out. All right, Lobo, you've been a highly successful investor in the space in this space for decades. You're one of the go-to voices for information and for direction. The metals and the miners, they were going through an incredible upsurge until last week, when they got taken out to the woodshed. There's a lot of investors out there right now that are feeling run over. They're saying, what in the world just happened? Of course, there's a lot of speculation and theories that are floating around as to really what happened. But before we dive into all of that, what do you hope for those tuning into this discussion right now that they're going to walk away with after listening to it?
Well, I would imagine that your audience is not all of one stripe. And I imagine a lot of them are, long-suffering gold and silver bulls who finally had their day in the sun. And the message for them would be considerably different than for anybody who just jumped on the bandwagon, who saw the headlines recently and got interested in the monetary metals, and actually all the metals, commodities, critical minerals. In the last year plus has been pretty exciting. And the takeaway is going to be different, Gary, because obviously, if you were in a long time ago, you had huge gains running up here. And if you let all those slip through your fingers, really the place to look for responsibility there is the mirror. Whereas if you're somebody who's come at it more recently, it makes more sense. You just got in. Okay, yeah, it's going great, but, is it already time to get out? It's a very different mindset, I think. But if I could put a common thread on it, first and foremost, no price goes vertical for too long. Like, it was to be expected that there'd be at least some measure of correction. Anybody who says, no, it's got to go straight up without any meaningful correction, that was irresponsible to say the least. Even bulls, that you do that, you set people up for a bunch of hurt. So that's number one thing. There's actually nothing all that untoward. Yes, the pullbacks have been really eye-opening, but so were the spikes. So in proportion, percentage-wise, we still have some records here. But, we had an off-the-charts vertical surge, particularly in silver recently, but really, the other silvery metals too, and gold. And it was anything but a shocking surprise that they should retreat. So there's that. Then the other frame of reference would just be, I remember in recent interviews, and I got a lot of hate on social media for even saying this, but I remember saying, gold could drop $1,000 an ounce, and it would still be at an absolutely fantastic level for the business of mining the stuff, or exploring for the stuff, or building. Like, we're down $1,000 an ounce now, from 5,600 to 4,600. Maybe it's come back up a little bit at this afternoon. But 4,600, are you kidding me? These mines were built considering prices under 2,000, right? So actually, nothing bad has happened yet. If the metals got ahead of their skis here a little bit, nothing bad has happened yet. So the real question is what happens next, and I'm sure you're going to ask me, and I don't have a crystal ball, but we can talk about that.
All right. So basically the takeaway, though, to get started here for the folks that are tuning in is, yes, it was pretty shocking. We had a shocking run up, a shocking taking out to the woodshed and retreat. But where we're sitting right now, it's nothing shocking really has happened yet, especially in relation to the miners.
Well, yes. There's a whole different can of worms there, because the miners, the mining stocks, typically lead the metals. And this is one reason why, instead of saying, hey, that was it, that was the blow off top, we're going into a bear market now, that's not my position. I must say it is possible. And anybody who guarantees you that it's not, they should put their money behind that guarantee, because there's no way you can prove that. It is possible that last week and what's happening now was 2011 all over again. That is not my view, but it would be irresponsible for me or anybody to say, no, cannot be, no matter how convincing the fundamentals sound, right? But the miners do typically lead on the way down, and they were just starting to catch up. So that is one of multiple reasons, and I'm more of a fundamentalist than a chart reader. The central bank gold buying, that doesn't go away. The people who are alarmed by geopolitical trends around the world, the Trump upsetting of the checkerboard, whether you're in favor of that or not, I'm not taking sides on that. I'm just saying you upset the checkerboard, and that increases uncertainty, that increases demand for safe haven. I mean, gold loves Trump. Has Trump gone away? Has he become any less Trumpy? Right? So, and
speaking to the central bank's point, did you see the chart that shows for the full year of 2025 how much demand there was? It hit 5,000 tons for the first time in history.
Yeah, no, I haven't seen that chart, but the levels were elevated every month, so I'm not surprised. But what I'm saying with that is, as a fundamentalist here, nothing has changed. If anything, the world looks like it should drive monetary metals, and probably the commodities as a super cycle matter, critical minerals, all that stuff. Nothing has changed. It should be heading higher. And that's my base case. I don't know, but that's my base case, and I am actually willing to put money to work there.
Let's dive in.
Sorry, go ahead.
I was going to say, let's dive in a little bit here. Silver was decimated by 35%, gold by 11% in one day. I'm just curious, what do you make of the event in terms of what caused it, aside from the fact that it went up dramatically? It was really, when you think of Six Sigma, it was off the charts in terms of possibilities and probabilities of occurring in human existence for silver, especially. So do you think there was some engineering help to it?
I'm neutral on that. I know a lot of people, something goes bad, they want to look for somebody to blame, and it may even be true. The CME did increase margins again, but they actually do that regularly, and it's actually in the rules. It's not like they changed the rules to do that when they do it. It's in the rules that they can do that in times of extreme volatility. And guess what? We had extreme volatility. There's news out of China, and there's multiple ways we could point the finger if we wanted to. We'll never know, except maybe in hindsight, if some behind the scenes McNamara type publishes a deathbed confession 30 years from now or something, maybe we'll have the smoking gun then. I'm not saying it's wrong. I'm just saying that kind of explanation doesn't help me. And by the way, if you believe, every time something like this happens and people jump to the manipulation as everything explanation, the problem with that is people say, the market's totally manipulated, I'm taking my marbles and going home. Well, if you do that, the markets are always manipulated. If that's the explanation, when are they not manipulated? You take your marbles and go home, you stay home, and you miss out on a lot of opportunities to make money. So my view is that there's always some level of manipulation in the markets. I'm not a manipulation denier, if you will. I just see it as a constant rather than a variable. And if I take my marbles and go home because I'm afraid of manipulation, then the opportunity cost is enormous. I mean, Gary, I'm filling out the forms right now to finalize liquidating or closing down my mortgage. I paid off my mortgage, and I can't just send in the last check. I need to fill out these forms and stuff. So people say, well, if you're going to take profits on gold you fool, what better thing could you buy? Well, I just paid off my mortgage.
Peace of mind.
I don't know whether there's manipulators or not particularly responsible this time, but prices went vertical. I took some profits. I went beyond the point of no concern, as our friend Rick Roll likes to say. And what did I do with some money? I paid off my mortgage. And I've got cash to deploy in the fire sale. Like if this continues, and it is as we're speaking, if this continues, there will be bargains when literally a week ago, there was nothing on my shopping list in the gold and silver space because I didn't want to buy high and hope to sell higher. I want to buy low. And I might have that opportunity and I will have the cash to take advantage of it. Not because I knew this was going to happen, but just because I knew that nothing goes vertical forever.
Yeah, and to your point about being able to find some bargains, sentiment has been completely reset. There's a lot of people who have taken the message away from this epic slam as do not go near this market ever. And so they will not participate.
Yeah, that's the wrong message. I mean, I can absolutely understand if somebody bought the peak, somebody had to top ticket. That would be hard. If
new people are coming into the market daily, then there are going to be people who didn't understand the market, didn't understand what they were buying.
Did top ticket, Gary. They should be able to, like, somebody might be flat right now if they just bought 2 weeks ago. Right?
That's amazing.
They haven't actually lost anything. Hopefully that creates the mental space to look at this rationally and consider what's really going on. And again, my view is, and was before all this happened, was that we were likely to see a period of correction and consolidation. I'm not saying I called the timing or anything. That's been my view, and it looks like that's where we're headed. If I'm wrong, it should recover very quickly, and we should, the next move would be that blow off top. And by the way, if you're convinced this isn't me, but if you're convinced that the next big move is that blow off top, this correction right now is an absolute gift to load up on the obvious beneficiaries of that flow off top. But that's not me. I'm not willing to take that chance. On the other view, if it's going into bear market mode, you'll never really know that until hindsight. So, if you're worried about that and you can't, like if you're older and investing with a nest egg that you cannot afford to lose, it would be prudent to watch this puppy for a while, see if it does, consolidate, start carving out a bottom before jumping in, because you could be, it's not my view, but the responsible thing again is to say you could be trying to catch a falling knife right now.
So I'm pretty sure that back in October, November timeframe, you had seen that that silver was added to the critical minerals list for the United States. I'm sure you saw earlier today, that President Trump announced a $12 billion critical minerals stockpile to blunt China's dominance. Did you see that?
Yes, I did.
That comes on the heels of this epic slam down. If you're going to buy minerals, critical minerals, and you can affect the market, do you think what do you think of the timing of that? What do you think of the timing of that?
So actually, this connects to your last question. Let me just say, I just said I see manipulation as constant. I'm not taking sides on whether there was manipulation or not. But just the vertical move itself, that was sufficient for the reversal. You don't have to have manipulation. There didn't have to be a pin to prick the bubble. It could have just been, one tiny grain of sand and one person saying, well, and then, that triggering somebody else, stops get triggered, waterfall event falls.
Exactly.
It is actually not, it's not true, it's not logical, it's not necessary that there had to be something to push, the stop button on this. Just that scream and rise was enough by itself. So feeding into this, let me put it this way. A lot of Trump's base overlaps with gold bugs. So if Trump is trying to maintain support for his agenda, why would he piss off the very people who are more likely to vote for him? So I we can imagine that, yeah, maybe in some Machiavellian way they wanted to push down prices to get a little bit. This is the government. They can always just print more. Trump has certainly shown that he's willing to print more, so they don't need to beat the price up. He can print more, and he can make the gold bugs happy, and he can make the the miners happy, and he can make the Defend America First people happy. Why not?
Well, you're right. You're 100% right. However, Kevin Warsh was nominated yesterday, and he's being touted as a hawk, and he's going to fix the budget problem, and we're not going to be lowering interest rates anymore. We're not going to be printing anymore. It's going to be tight money, and so that kind of flies. That's a little contradictory if Trump could just print as much as he wants, yet he's appointing a hawk.
Jump in on that, because I think that's really important, Gary. I think investors accepting that narrative as you've just laid, I think that's absolutely delusional. Personally, in the race between the Kevins, I was voting for Costner or Bacon over either one of the ones that were the front runners. They would have done a better job, I think. But I think there is absolutely no way that Trump would give the nod to somebody who was not going to, at the very least, bend the knee.
He's been yelling at Powell for
absolutely.
You're going to lower rates. He's calling him all sorts of names, and now he's going to let this guy raise rates.
This calms people down. This shuts up the arguments. This appearance of caring about the dollar. They keep talking strong dollar, whereas everything they're doing is weak dollar, right?
Exactly.
This fits the MO. Say one thing, do another. And sorry, Trump fans. By the way, Winston Churchill did the same thing during World War II, and Trump has a bust of Winston Churchill on his desk. I think in many ways, Churchill saw himself as like on a mission from God to save London and the empire from Nazism, and that sounds very familiar to me from what I see emanating from the White House now. And anything went. They even. Never mind. I don't want to.
Well, let's just frame this up real quick here, and I'll ask it.
To finish the Kevins, right? I don't think any Kevin mattered at all. That was the point of my joke. I think if Trump doesn't have incriminating evidence on anybody that he puts in that office, he has some kind of extreme leverage. I think this Kevin, anybody appointed, and all the Trump people on that committee are going to vote for lower rates no matter what. And if that's true, the market, reacting as though this Kevin really is a hawk,
it's going to reverse.
That is a mistake. It is a market mistake, and that is investable.
Totally agree. And that really was my question, but I was going to ask it from a different perspective. I was going to ask it from a math perspective, in that the U.S. currently has a debt to GDP of about 125%. Volcker, who they're comparing Kevin Warsh to, he was dealing with a 30% debt to GDP. He had plenty of room to manipulate and to increase the budget through interest costs. But there is no room. We're at $1 trillion right now of debt servicing cost to the budget. We're running a $2 to $3 trillion budget deficit as it is. It's growing, and we have 10,000 baby boomers who are retiring every single day and adding their cost now to the budget deficit. So really, the U.S. budget can't handle, mathematically speaking, higher rates, especially with, I don't know, if they say it's about in 3 years you turn over all the debt. So we're going to go higher rates from here over the next 3 years on 40 trillion when we're already running a trillion. Yeah. On what planet? So isn't math not narratives? Like right now it's a narrative, but isn't math ultimately going to determine Kevin Warsh's choices here?
I don't know that he even has choice. I don't want, I joked about incriminating evidence. I don't know how the system works, but let's just put it this way. Trump 2.0 learned from 1.0, and if you learn nothing else, he learned to put yes men and yes women in. And again, even if you approve of the agenda, I don't think my statement there is very controversial. Trump has an agenda. If you approve of that, then, thank goodness that he put people in that would do what Trump said no matter what. And I just see no reason to believe it's just incredible, like literally in the sense of not credible, not believable, that he would put anybody in this most powerful position that was going to go against his agenda. Zero chance. None.
Couldn't
and
agree
again,
more.
to the degree that we're seeing not just gold and silver, but anything in the market moving on this assumption that Warsh has integrity and will do what he. Let me scratch that.
Well, that he's a hawk, like he's
Right.
Volcker Part 2.
Let's just go with a hawk. Yes, I think that is a huge mistake, and it's a contrarian opportunity. And I may be wrong, but I'm willing to go on that limb and say I think that's a huge mistake. And the bets that are being made now, based on that, will be reversed when reality asserts itself. Because as you're saying with the math, right, that's reality. At the end of the day, reality always matters. And the interest payment's already bigger than the military. And okay, Trump's answer to that is I'm going to increase the military spending 50%.
Right, exactly.
But how long before the interest payments go up 50%?
Well, I guess if the narrative ends up being true, and they raise.
This is not funny, actually, Gary. This is really serious beat. And you know what? $4,000, $5,000 gold. People were asking, what is this telling us? Look around the world. I think it's telling us, what we see, the chaos, the turmoil, the uncertainty. And oh, by the way, suddenly everybody's decided, oil's down 5% as we speak, because suddenly everybody's decided that everything's going to be fine in the Middle East because Trump is having serious talks with the Iranian regime.
It's unbelievable
it is unbelievable how people will not just move millions, but billions based on say-so from a politician. I mean, any politician, lips moving, the joke.
All right. So I couldn't agree with you more on that whole segment there. But on the volatility side, with what we've seen in gold and silver, I don't know if you were watching the overnight and then early today, it was unbelievably volatile. It was so manic depressive, however you say that, going back and forth. And it was really shocking to watch from hour to hour, 30 minutes to 30 minutes, how quickly and how strong the volatility.
What's interesting to me about that, Gary, is it looks like, bulls and bears. There are people out there who maybe get all these things that we've just been talking about, and they see the sell-off as an opportunity. Right? They want to go long before, the real Kevin reveals himself, or, right? And other people are just panicking and, oh my God, gold's down $1,000, it's the end. It's 2011 all over again. And there I can see where you could have people in both camps. Mm-hmm. And one places a bigger order now, and one places a bigger order, 10 minutes, and it goes back and forth. That kind of volatility. And there was quite a bit of sawtooth action there.
It's amazing. It also feels like there could be sovereign economic warfare going on in there, battling like East versus West.
Do you think the PBOC cares which Kevin got appointed?
No way.
Do you think the Russians, they're going to change their plan because a different Kevin than expected got in?
No.
It's silly. I mean, it really.
So are you expecting?
Sorry, just real quick metaphor here.
Yes.
This reminds me of that DeepSeek moment. Do you remember last year when the DeepSeek news came out and everybody said, oh my God, we're not going to need all these data centers, all this power generation and copper tanked and uranium tanked and everything tanked. And what happened? Okay, more efficient AI, that just means we'll use more of it, right? Not that we're going to use less of any of these inputs, right? So that moment, like we had uranium stocks, I don't remember copper in particular, but I remember uranium, we had prime names, you don't need me to give you the tickers, you know who they are, went from 52-week highs to 52-week lows based on that DeepSeek head fake. And then within months, back up to all-time highs. So if we're in an analogous situation right now where the market is just reading this wrong,
that's good.
There is opportunity knocking.
That's really good. I really like that. So, okay, so just one last note on the volatility. Are you expecting this extreme level of volatility to continue? Are we in some kind of bulls, bears, sovereign battle going on here that we don't even realize the extent of it, and the volatility is it's something we need to get used to?
Yes. If there's nothing else I'm confident about emanating from the White House, it's uncertainty, which, by the way, is good for safe haven assets.
That's fair. All right, so Lobo, back last October, gold was on a parabolic run, and the entire metals world was giddy. It felt very similar to what was going on with silver this time, although silver's run probably was a little stronger. But there was a 6 Sigma slam down in October on gold, which pales in comparison to what happened here last Friday. But everyone was screaming after the slam down. The top is in, gold moved too far too fast, it's too far from the moving averages, it had too much froth, it was outside the Bollinger Bands. Every time this happens I've ever seen on the charts, it's a multi-year bear that's going to ensue. But the opposite happened. Gold got slammed at the time to about 3,900. It rose to almost 5,600 despite all those people saying it was over. And right now it's, I don't know, 4,700-ish. This was 4 months ago and 20% ago when they were all saying what I just expressed. So clearly, looking at the charts, going based on the technicals, it didn't work because for some reason, and I'm not sure why, this is a different cycle than we've ever seen. So do you feel that you just can't look at the charts alone here for whatever reason? This is a different cycle than normal. It's just not behaving the way most would expect it would.
I wouldn't say feel, I would say think. I think, and I have been saying for years actually, that we are off the charts. We are in uncharted waters. So almost by definition, it's a mistake to pull out your charts if you're in uncharted waters. It doesn't mean that there's no patterns in the markets anymore, or that market signals mean nothing. But I mean that quite literally. Nothing like this has ever happened before. We've got wartime levels of deficit spending in peacetime. After a 100-year event with the COVID lockdowns and the knock-on effects from that, and we've got to. I've been calling what we've been seeing Trump shock, and that's not a pejorative. It's analogous in my mind to Nixon shock. When Nixon slammed the gold window shut, he not only changed the economic foundation of the United States, but the entire world, which due to Bretton Woods had adopted the dollar as good as gold. So slamming the gold window shut changed the entire economic order for the whole world. And Trump is trying to do something reversing that, pulling the U.S. out of the middle, America, Fortress America, all this stuff. That fundamentally reorganizes the entire global economy. I think this is of that scale of magnitude of change. And again, this isn't a criticism, whether you love it or hate it. I think this is what's going on. And by the way, the agenda needs a lot of raw materials, but it is that kind of major change. If we know nothing else about it, it's very unlikely to be painless, and that is very supportive of monetary metals in particular, but anything real and that governments can't print as well. So going to your question, I think we're off the charts. I don't know what happens next. Past patterns may not hold. Your typical head and shoulders. If you just turn out to be a pimple on a much larger head and shoulders, who knows what that could be, right? So I take all of this stuff with a grain of salt. As a fundamentalist, I look at this trillions and trillions of money printing, or as Lynn Alden would say, the fiscal dominance just seems so massively dominant, and we underrated it in recent years. And has that changed? All of that said, Gary, and I said a while ago, and probably your Gold Bug fans were reading their rotten tomatoes. I'm a bull. My outlook, my base case is consolidation before a much larger move higher. Who knows how much higher? Maybe 6-digit gold, right? But that there is no way I or anybody can prove to you that we're not at that 2011 moment now. Like $5,000, almost $6,000 gold, that might have been it. That might have been pricing in all these things that we've been talking about. I don't think so, but it's possible. So I don't want to rain on the parade too much, but I don't want this interview to be taken as Lobo Tiggre said, go buy, you can't lose, because that's not the case. My view is let volatility be your friend. Don't be afraid to take profits when you have them, and look for opportunities to buy low and sell high. Just don't forget the sell high part.
So that was a really good actually segue into this other question I had for you. And, I listened to a lot of different voices, both in our space, but also Wall Street. There's a Wall Street theory out there on gold's rise to this 5,000 to 6,000 zone that reflects basically the elite or centrist fear of Trump's shocks and his disruption of the status quo. So that's the reason why gold has moved, is strictly because of this fear of Trump shocks and disruption of status quo. They see gold's ascent as being almost over, topping around 6,000. Now, mind you, a lot of these people didn't think when it broke out in 2024 and we were around, and I was asking them questions around 2,500, they were laughing about the idea of gold going any higher then. So this is kind of a repeated theme that it's always topping. But with that said, they're saying that, it's probably topping around 6,000 as its job of dealing with the barometer of uncertainty surrounding Trump is almost done, and that combined with the expected growth and reacceleration from the Trump administration moves that they've made, that's going to cap it from moving forward. So basically what they're saying is that gold's move has matured for the reason that it was moving up. Does that hold any validity in your mind?
No. These pad explanations I'm always skeptical of. But if nothing else, that explanation leaves out the central bank bond. So I just don't agree with that. Now, it could be that they're right on the timing. If $5,600 gold was actually pricing in all this other stuff that I think still will drive it higher, if I'm wrong, if I'm overestimating how much damage that does and underestimating how high gold has responded to that, then this could be it. That could be the top. But I don't think it's for that reason, the central banks. Now, it's interesting that you frame it that way, though, because I do think, remember, you've talked to Rick Rule, I'm sure, about how his, the long-term average allocation to gold globally is 2%. And recently it's only been 0.5%. So you don't need to have everybody filling their bunkers in Idaho with gold bars and silver bars and stuff like that. If it just reverts to mean, if it just goes back to what was normal, that would quadruple the investment demand for gold. I think there's evidence that that's happening. I don't know that it'll go back to the previous mean, but you know what? If it just went back to 1%, that would double the investment demand for gold. And I can't prove this, but anecdotally, it just seems like you hear deep-pocketed people. Famous people like Gundlach and Dalio and others have talked about gold. Gundlach famously saying 25%, not 2%.
Morgan Stanley
would not be excessive, and then he dialed it back to just 10%, right? And Morgan Stanley, the instead of 60-40, the 60-20-20, like there has been a game changer here, and it's not just the central bank buying; it's institutional money, it's deep-pocketed money, it's old European money. There are big pools of cash out there that have said, you know what, some allocation to gold is reasonable, whereas it was like, crickets before. And I don't see that changing. I certainly don't see the wrong Kevin changing that.
I couldn't agree more. All right, so Lobo, before the slam last week, the miners were, by many measures, they were lagging the run-up in the metals. They were considered undervalued, but especially for silver. Fourth quarter earnings are going to be reported soon, and the price of the metals was up substantially in the fourth quarter versus the third quarter, and especially for silver. What kind of impact are you expecting earnings season to have on the miners in light of what has just happened here?
Yeah, good news and bad news here, I'm afraid. The good news is I do expect a spectacular quarter. And even after the haircut we just took, these prices that we've got now are still phenomenal prices. We should have a good Q2 as well, depending on how it goes. If I'm right about correcting and consolidating, we'll still have a fantastic all of 2026, anywhere near these levels. But certainly Q4 25, you would have to be criminally incompetent, or just say criminal. You'd have to be like stealing the money from the mine not to make money at the average realized prices that miners had last quarter. There's no way, there's no way an honest miner could fail to make money with prices that are 2 or 3 times what was assumed when they built those mines, even if costs are higher. So yeah, great quarter coming, and I think that's powerful. But if the metals are continuing to fall, I don't expect great earnings to outweigh that. And the good news is that if the metals fall and the stocks just get whacked, never mind the woodshed, they get blown out of the water completely, right? If that happens at the same time that they're making more money, your value proposition is improving. So the difference between price and value is the essence of what Doug Casey taught me as a basis for speculation. So I don't want this to happen. I'm just saying that if it does, whether I want it to or not, that can be a source of opportunity. But I think it's naive to think, oh yeah, they're going to have blowout earnings, and my company with its blowout earnings, it's going to be spared the bloodbath. No, nobody gets spared the bloodbath. If we see another $500 drop in a single day in gold, your most stellar performer is still going to get whacked. Don't kid yourself.
Do you feel comfortable saying if the metals, despite today's volatility, they have relatively held strong, at least before we came on when I looked last? If they just stay in a zone now, let's say from 4,500 to 5,000 and ping around for gold, and say 77 to 85 for silver, if they just ping around in that zone now for a couple of months, how do you feel the miners would respond in that scenario rather than the continued drop in the prices?
Yeah, I think they would respond better. We'll see. Mr. Market can be so emotional, and
Sure.
Let's say we ping around between 47 and 5,000 all year, up and down all year. That would actually be a fantastic price for the actual business of mining the stuff.
Right.
The feasibility studies for the developers, they wouldn't assume that price. It would be assuming lower prices for exploration. You have none of it, so it doesn't, like Rick Roll again says, if you have no gold, it doesn't matter what the price of gold is. But in a price environment like that, what you're exploring is so valuable that people will fund your work. So the reality is that something like what you're describing would be fantastic for the actual companies, what they're doing on the ground. And to the degree that investors get disgruntled, disappointed, or, oh, this isn't 5,000, I'm taking my marbles and going home, or, right? To the degree that happens, that is an opportunity, in my view.
Okay.
The only way that's a mistake is if we get, let's say, if this week was the peak in September of 2011, gold kind of fooled along volatile for a year, and then it really fell off a cliff in 2012. So if that's in front of us and you start buying and accumulating over the next year, and then there's a cliff in a year, then you'll get hurt. So, I don't think that's where we are. Again, I do not think that, and I do expect to be buying this year on the volatility, but I can't promise you that it won't be otherwise. I think the fundamentals say otherwise, but
I want to briefly ask you, Lobo, about the general stock market. There's a lot of folks that are worried about a 2008 style crash. It's on a lot of people's minds. There's a lot of volatility everywhere we're looking. They're real concerned about that. Are you in the camp of a 2008 style stock market decline, or maybe more of a robust economic growth that might lead to just a rotation within the markets, out of the concentrated Mag 7 and have a more broad-based
I get paid to kick rocks, Gary, so I don't have a whole lot of conviction on the broader markets, but I will say that in my career, in this career, since I started with Doug Casey 20 whatever years ago, I don't even want to think how many years ago it was, every year, gold bugs and hard money advocates tend to be suspicious of the mainstream economy, and every year there's people saying the market's going to crash, the economy's going into recession, maybe we should sell our stocks and buy, after the crash. That would have been the smart thing to do in 2008 and in 2020. Every other year in my entire career, that would have been a mistake. So you say, what's the math say? And I'm telling you, the math, whatever your own personal view might be, the math says, you have a 1 in 10 chance, maybe.
Well, the reason why I'm asking is because many people are concerned about their mining stocks, that the number one issue out there that could cause a massive downdraft for them would be a stock market crash. Outside of that, because of the fundamental, backdrop that we were.
I take the other view on that one, Gary. I mean, if there is a bona fide market crash, a 2008 or 2020 type event that, or gold will get whacked, the stocks will get whacked, everything gets whacked at that moment. But they come screaming back afterwards. And here's the thing: if the reaction is the initial liquidity drive puts these things on sale, and then as soon as that liquidity is met and cleaned up, and they go screaming back again, then gold goes screaming back again, everybody will know that the miners will make huge amounts of money. Right? So at a time where other things, if you got economic weakness and people are not sure whether the Mag 7 are going to recover or what's going to happen, the one thing that will be sure is that those miners, and here's where that reporting that we've been talking about, the earnings that we've been talking about will come in. The earnings, everybody else's earnings will be in question, but not the miners. And the mid-tiers become, takeover candidates. And the juniors also become assimilated, because if you're not discovering, you have to acquire. So it supports the whole sector. It trickles down. It takes time to do that. But what I'm saying is there's a scenario here where the broader markets and the economy goes into a tailspin. And that very thing drives safe haven demand to push the monetary metals higher, which actually keeps the fire under the boiler for the miners and related equities. Okay.
So one of the reasons why I started with the stock market to ask you that question was because I was actually interested in getting to your perspective on copper. Do you think that, we're seeing a lot of reports about expanding economic growth, about 5 to 6% GDP this year. This flies in the face of a lot of statistics of other things. We're in this K-shaped economy, and a lot of people are suffering on the bottom of the K. And there's a lot of data points that you could point to that the economy's in trouble. But yet, at the same time, you got the Atlanta Fed that's pumping out. I forget, it might be like a 4.3 for the fourth quarter GDP. It was higher than expected. Now we're hearing rumblings of 5 to 6% for the year. In that kind of environment, you would expect the demand on copper to go higher, right? And therefore exacerbate the current supply-demand issues that already exist there. What's your take on what you're thinking?
From our last question, if there is a recession, if things do come apart, then that's bad for Dr. Copper. Like I just said, only 2 years out of my entire career has that actually happened. But it does happen. I think the odds are not in favor. And again, Lynn Alden, fiscal dominance, and specifically, the kind of build out, the critical minerals thing, it's not just electric cars and data centers, it's military. And, did you notice, Gary, that, sorry, I'm going a little bit sideways, but it's relevant to your question. Did you notice that uranium just shot up to triple digits again before correcting?
I did, and that's good. I'm going to be talking to you about uranium next, but feel free to make a comment.
They're both energy metals, right? Uranium and copper, slightly different ways, but they're both energy metals. And, there wasn't any real huge proximal cause. Sprott bought a bunch of uranium, but I don't think that alone was enough to drive it that high. And certainly Sprott tries to buy at a good price, not up 20% in one fell swoop. The military, on the other hand, they don't care. I mean, maybe I would say they don't care at all.
Well, and the government added copper to the critical minerals list, so the government is stockpiling.
But what I'm saying is the military doesn't report its purchases of uranium or the prices or whatever.
Right.
So there's no transparency on that. But suddenly you get a big move, and it makes me wonder about that. And the connection to the copper thing is that you've got a military use for that too, and these other critical minerals. So there's, let's just say, a less price sensitive buyer for all of these minerals that are near and dear to our hearts, that has a voracious appetite, just jacked up by 12 billion as you and I speak, right? So that's very supportive, even and on top of, in addition to Dr. Copper just being an essential economic, foundational metal like iron. We live, no longer in the Iron Age as such. But take away the iron and we have nothing. And in our modern world, it's the same thing with copper. So to me, the economics, the pros and cons, and fiscal dominance versus shocks and weaknesses, I don't know how that plays out. But this is an essential, irreplaceable, foundational metal, and the supply is constrained. Right? That, to me, signals a buy. So my view is not that it can't go lower this year, there won't be any volatility. My view is that if it does, I've got cash ready to buy. I'm extremely bullish on copper. I have a shopping list sort of on ice because it got away from me for a while, and now it's coming back, and I'm dusting off my shopping list because I would love to add more copper to my portfolio. And really, Gary, if I get hit on what I think are acceptable prices, I don't care about what happens next or the volatility up and down. At some point, great companies that have got the right stuff that aren't going to blow away on the next volatility bout, I think you just buy them.
Okay, so let's just put a few things together here with this question. So silver's going higher. It hit 121, I think, last week before the implosion started. But there was a lot of talk that started as it was taking off that, well, silver it's going to be one of those things where when silver gets to a certain price point, we're going to replace silver, with an alternative metal like copper. Okay, I was hearing that a lot, and that's very sound logic. However, on the flip side, isn't copper also a critical mineral, also being stockpiled, also in a supply deficit, also with nothing on the horizon, no supply ferry coming anytime soon, yet we have this military modernization, we've got this grid modernization, we got the data center build out, we got the rising up of hundreds of millions of people in the Asian circle. I don't understand, or maybe you could help me understand, how we could start replacing too expensive silver with cheaper copper that might not exist.
Well, I understand what you're saying, but the prices are still not comparable. If you can substitute copper for silver, $6 a pound is nothing like $80 an ounce. So if you can substitute it, you will. I don't know many ladies who would be very happy these days with a copper mirror, though 10,000 years ago that was a great thing. So there's a lot of substitution that's just not going to happen, right? It's silver's reflectivity. There's something. It's chemical.
Like in our military, like in our drones, there's some things that are just.
Yes, you want the best you can get. You're not going to substitute that. On the other hand, if you've got, let's say, a copper version of a solar panel that's, let's say, 10% less efficient. Well, 10% less efficient versus a tenth the cost, that starts to make sense all of a sudden. So we could, and that is a huge use case. So we could see actually, I think, significant substitution. But on the other
part, they're looking to build
new uses. Like, remember when photography, the big scare with photography, we're going to digital photography. We're not going to need any silver anymore. It's the end of silver because everybody's going digital on photography. And guess what? It turned out the gadgets, they use more silver than the film ever did. So, yeah, I'm not persuaded by these bear cases for silver. If you really want a bear case for silver related to this, it's not copper substitution. It's that the demand for copper gets so big, prices rise so high, that high prices cure high prices, and a bunch of huge mega projects come online. And as everybody knows, silver is mostly produced as a byproduct, and copper is the single biggest source. If you combine lead and zinc are bigger than copper, but on a single metal basis, big copper mines are the world's largest supply of silver. So if we're going to have bunches and bunches of these major copper mines come online, that will increase the supply of silver. And if the demand of silver doesn't keep up with that, then that could be a bearish scenario. But that's going to take years. Like, if that happens,
we're not close to it.
We're talking 5-10 years down the road, maybe.
Right. So, okay. So, I'm just struggling with the idea that if the military needs it, if the European countries' militaries need it, if the the data centers and the build out of the electrical grid all over the Western world needs it.
And nuclear power.
Yeah, needs all this copper. I just
No,
and
silver.
it's well, I'm
Sorry,
saying needs all the needs all the
Control rods,
copper.
they have silver.
Well, all of those need mass amounts of copper, and we're already approaching a deficit, cliff here in copper. Won't those things trump the solar panels? Scaling back from silver to copper, I would think they would. Military is not going to allow any substitution on silver. The data centers, to win this AI war that's existential against China, I just don't see them being willing to substitute silver down to copper.
I hear you. I guess.
I think there's something on the go.
It's still so huge, right? There will be some substitution.
I can agree. Yeah, I can agree on that.
But if the demand is growing on both of them, then I'm just not worried about that. Yeah,
it's going to be hard.
We'll see if I'm wrong, but I'm not worried about bear cases like that right now. I'm more worried about market fluctuation. Not worried. I'm more looking forward to market fluctuations, so that I can buy more.
All right, so real briefly back to the uranium, Lobo. The supply deficit's real and growing. Largest mines in the world, they're not meeting their production targets over the last several years. They're always lowering them too. The mines that are soon to come online, they keep pushing back their start dates further and further. The story just keeps getting better and better. Countries are pledging to go more nuclear, more mines to be built. The Sprott Uranium Trust recently issued a $2 billion prospectus, and they're going to pull 9 million pounds a year off for the next 3 years. Utility buyers, they seemingly have been on strike the last couple of years and they're facing dwindling inventories now. They need to buy years of supply. And all of this, like you said earlier, spot prices are around 100. Contract pricing is anywhere from like 80 to 120. And Mike Alkin was on the show the other day, and he was saying upside collars are as high as 160 on the contracts. What's your perspective on the uranium market here? Are we in a sweet spot this year?
Well, you laid it out very well in your question. I'm long, so I'm happy to just ride it as it's going. If I were new to the space, it'd be difficult for me to chase it after it's just gone vertical. And it has corrected a bit, but nowhere near as much as gold and silver have. But everything you laid out in your questions, I agree completely. That's how I see it. The demand is going through the roof. The supply, I think it was reasonable for, like 2 years ago, it was reasonable for investors to say, oh, well, we hit triple digits, high prices cure high prices, we've got low-hanging fruit out there. I mean, it was kind of like OPEC, right? The world's biggest and lowest cost uranium producers were under voluntary supply constraint. And those were big mines. So it's reasonable to say, well, how high can it go? High prices cure high prices. But we now have the answer. As per your question, those big boys, they all move the goalpost. The other ones, projects are late, completely derailed, underfunded, or just not delivering as hoped. I can't think of a single one that has delivered on time, on budget, as expected. They're all behind. So that question is now answered. That there is no question about how easy it is for high prices to cure high prices. It's going to take more time. That said, it rubs my fur the wrong way to jump on something that's just gone vertical like that. My hope for anybody that isn't long uranium already is that we get another one of these stupid deep seek moments, something like that, where the market, or the wrong Kevin, or who knows, something whacks uranium for completely the wrong reason. And you might say, well, gee, that's not an investable hope. You don't invest on hope. No, I'm not saying invest on hope. I'm saying I wouldn't invest after something just went vertical. But these things happen. We've got Kevin's now. We had DeepSeek last year. Who knows what will happen next? If you wait for those opportunities and buy low, I think you'll do well. I'm very bullish for years to come on uranium as well as copper.
Well said. So, Lobo, what haven't we discussed today that we should be considering for 2026?
The segue from that, the buy low opportunity that's foremost on my radar right now is actually oil. Rick Rule has been talking about this recently. Actually, been talking about it for a while. I've been reluctant to catch a falling knife there, and I felt pretty good about that throughout 2025. I was resisting the urge, but we're now at a point where OPEC has already been ramping up again. We'll see what happens with the wars. I'm not convinced that suddenly Venezuela is going to make a bunch of cheap oil. We've got low prices starting to cure low prices in the U.S. We've had reports of some shutdowns and pullbacks in production in the U.S. Not a lot, and there's a lot of growth on. It's a big, complicated market, but it's gotten to the point where I see more upside than downside, and there are, I think, legitimate buy low, sell high opportunities. There are still some stocks in the oil patch that are way high. I'm not chasing anything at all-time highs, not even if my friend Rick Rule likes them. But there are others that I think, they're steady performers, consistently profitable, or great royalty plays that are doing well, that are still relatively in that buy low range. And in a world where almost everything else is gone up, I'm very keen to deploy buying low.
Does higher oil prices concern you for miners?
No.
For investment? No.
No. I mean, yes, it's a significant cost, but the prices for the metals. Okay, if I was an aluminum or or lead or zinc, maybe without a silver credit, maybe I would worry then, because they've gone up, but not that much, and higher energy prices would be a material issue for me. But if silver has 3x'd over the last couple of years, their energy costs could go up substantially without torpedoing the profitability of those companies.
Okay, wonderful. Well, this has been a wonderful discussion, Lobo. Before we wrap up here, I just wanted to direct everyone who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report. Now, I'm positive you've been enjoying the conversation Lobo and I have been having. Please let them know. Hit the like and subscribe button and leave a comment below the video. All right, so Lobo, would you please share a key takeaway that you want to leave the viewers with as we wrap up here, and then let everyone know how they could find you, learn about your work, etc.
Sure, thank you. The takeaway is not my work, actually. The takeaway is the point of my speech at the recently concluded Vancouver Resource Investment Conference was that if you focus as a methodological, unswerving fundamental on buying low, that's what you do as speculators. We buy low, sell high. We don't want to buy high and hope to sell higher. The greater fool theory is not our basic method. Our basic method is buy low, sell high. Well, that naturally, whether by design or not, you don't have to time market tops or be a super genius to predict the history of the world. But just doing that one thing, let's say I invest in a miner or a developer because they're building a mine. They build the mine. I take my profits. It's not because I don't love the metal anymore. It's because the company delivered on my basis for speculation. What do I do with that profit? I don't buy high and hope to hope somebody else will buy higher. I look for something else to buy low. Hence the oil play that I'm talking about now. So if you do that, that will automatically diversify your portfolio. If you had a bunch of successful plays in gold and silver recently and you took some money off the table, what are you going to do with that? If you look for something to buy low, it will naturally put you into a different segment. So I think this is very powerful. I don't claim to know the future or be able to time all these things up and down, but if all I do is not forget to sell high and then look for something that's still low, that is going to rotate my portfolio as the market evolves. I don't have to figure that out. I just need to follow the basic method. And this isn't an original Loboism. Everybody knows this. That what makes it difficult is just our emotions get in the way. We fall in love with what's working instead of insisting on opportunities to buy low. I'm a value speculator, if you will. As to where to find me, independentspeculator.com. I'll cut the sales pitch short and just say I have a free weekly letter. If you sign up for it, you may or may not agree with me on everything, but I can guarantee that I will not spam you with a flood of daily advertisements. I hate that.
And are you on X?
I am at Due Diligence Guy on X. And if I may say so, it's a pretty decent little corner of the Twitter space. I have some trolls every once in a while, but I have a lot of polite, useful people. The audience contributes graphs and ideas and things. Yeah, I like it.
Wonderful.
It's actually useful. My Twitter feed brings me ideas.
Wonderful. Well, I highly recommend everybody follow you, listen to you, tune into you on YouTube, on our show. Go back and watch your speeches at the VRIC or at the Rule Symposium. Are you going to be there again in July? Yeah. So, so I'll have all your information up on the screen. It'll also be clickable in the description area for everybody. Go check out Lobo. Thank you for coming on to Metals and Miners. You've been so generous with your time, analysis, and ideas. I always love spending the time with you and having these conversations, and this one was no different. I look forward to having you back on sometime soon. And everybody else, thanks for watching. One who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. When you join the quickly growing community, you're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio, and that's the name of the report.